Excuse me.
Yeah.
Yes. Okay. Thank you. Bye. Sorry, it's a PhD student of mine.
Okay, we're ready.
The broadcast is now starting. All attendees are in listen-only mode.
Okay, welcome to another TaxLink webinar. Today we're discussing current trends in anti-money laundering. We have a very exciting and experienced panel with us today to discuss all things related to AML and counter financial terrorism. Let me get some admin issues out of the way before we get started. This webinar is being recorded. We're going to have an audio recording of the event available to everyone probably a week after today. From today. We're also going to have a full transcript of the event for all of those of you who missed the event or who actually prefer reading about what is being said. That will take us a bit longer to prepare, but we will email all of you who are attending and who signed up for this webinar. We'll send you that transcript. So without further ado, let me introduce our moderator, Mario Chazas. Before I actually continue, if you have any questions, those of you listening in, if you have any questions and would like to submit them to our panelists, make sure to use the control panel, the GoToWebinar control panel. You could ask questions. I will receive the questions and I will forward them to Marius, and Marius will incorporate them into the discussion. So going back to introducing our moderator, Mario Chazas has worked in executive education, learning and development, and consulting for more than 20 years. He has gained plenty of experience working with organizations and individuals and building specialized and unique learning and development solutions for them. He has managed several development projects for large and small companies in Cyprus, Egypt, Austria, Bahrain, Greece, Canada, China, Dubai, England, Germany, and South Africa. He holds a BSc in Marketing and Management from Western Kentucky University, an MBA from the University of Guelph, and a Master in Adult Education and Training from Colorado State University. He's a member of the board of the Institute of Directors, UK Cyprus branch, and a member of the Chartered Institute of Securities and Investment. He's a member of the Training and HR Committee of the Cyprus International Funds Association, the Cyprus Human Resource Managers Association, the Cyprus International Business Association, the Association of Certified Anti-Money Laundering Specialists in Cyprus, and a host of other professional bodies. So without further ado, hope you all have a very enjoyable and insightful webinar. Marius, the floor is all yours.
Thank you very much, Matteo. Thanks for the introductions. Welcome, everyone. Welcome to our panelists. And let's start with the introductions. Just say hi to all the panelists. Stefan, if you want to just say a couple of things about yourself before we get started. I will go through all the panelists, so I'm not picking on you. Just I saw your face first here. So.
Good morning. I'm Steph Casella. I'm just outside of Washington, D.C. I was a federal prosecutor in the United States Department of Justice for my career, and now I'm working as a consultant to law enforcement agencies, financial institutions, and private law firms on issues relating to money laundering and asset forfeiture, asset recovery.
Great. We have Roy. Roy, you want to say a couple of things?
Yes, hello, good morning. My name is Roy Cullen. I'm a CPA by profession, but I'm a retired member of Parliament. I served in the House of Commons in Canada for 12 years and retired in 2008. And while in the House of Commons, I got quite active in bringing in anti-money laundering legislation, which set up FinTrack in Canada. And I've been very much involved with the global organization of parliamentarians against corruption and the fight against corruption and money laundering.
Great. And we also have Nicholas with us.
Good afternoon. Good afternoon from Cardiff. My name is Nicholas Ryder. I'm a professor in financial crime from the University of West of England, Bristol, and my expertise is generally financial crime, but over the last number of years it's in relation to counter-terrorist financing.
Great. So, wide range of experiences in our panel. So let's take a good use of the experiences, and let me answer. Most of the questions have been given to us from the members of LinkedIn. So first and most basic question to all panelists, starting from Roy this time, how would you define money laundering and financial terrorism?
Well, money laundering is a method used to disguise the origin of funds, usually from, well, almost always from illicit purposes, criminal activity, corruption, tax evasion, other acts. So it's a way of disguising it, the original origin of the money, because the origin of the money was either criminal or illegal.
Okay. Stefan, do you want to add anything to that?
Well, yes. I mean, money laundering to me is a very elastic term. I agree with Roy that it does normally connote the attempt to conceal or disguise the origin of illicitly derived funds, but it can mean other things as well. It could mean simply trying to hide money so that its connection to a particular event or a particular person is disguised and the money can't be found. It could also mean in a term that I call reverse money laundering, that rather than trying to disguise the origin of the money, the effort is being made to disguise its purpose. Money from any source is being used to promote some future criminal activity or to finance terrorism, and it's laundered so as to disguise that purpose.
Okay. Nicholas, something to add to that as well?
Yeah, I pretty much agree with what Roy and Stefan have indicated. I think Stefan's made a very valid point that it obviously reversed money laundering in relation to terrorist financing, and as we've seen within Europe in the last 12 to 18 months, that's become an increasingly significant threat to, well, global threat. And obviously the Prime Minister Theresa May raised this at the G20 summit yesterday, and where they're trying to re-galvanise, I suppose, the sort of the financial war on terrorism, which President George Bush instigated in September 2001. But nothing really to add to what's already been said in terms of definitions.
Okay, how much, Nicholas, let me ask you another question then. How much money do you, what's the estimate on money being laundered, let's say, in the last few years per year around the world?
I think it's how long is a piece of string. I think it's a question that is impossible to answer, and there's a great body of literature written by numerous economists, like, for example, Professor Brigitte Unger from the University of Utrecht, who has attempted to quantify the global levels of money laundering. But within the UK, the most recent statistics were published in October last year by the National Crime Agency, and according to their estimates, it's somewhere between £35 billion per year and £90 billion per year. So as you can see, the estimates are very broad and very wide-ranging. Other facts and figures, some would argue up to between 1.5 and 2.5% global GDP would be some of the normal figures according to the International Monetary Fund and the Financial Action Task Force. But I think there's no way to accurately determine how much money will be laundered globally.
Okay, that's a lot of money though. What are the, Stefan, what are some of the major trends in AML and CFT these days? What are the trends in general in the AML scene, and what do you foresee in the area and during the next couple of years as well?
Well, money laundering methods are becoming more creative and more complex. I mean, people still launder money by moving bulk currency from one place to another, but we're seeing lots of money being laundered in far more sophisticated ways. There's a lot of money laundering through shell corporations that are incorporated in countries that don't require the naming of beneficial owners. We've seen a lot of discussion of that in the press with the Panama Papers. There are also several recent examples of laundering by Russian organized crime that are very sophisticated. The mirror trading example, which involved parallel securities transactions in both Russia and the UK. The Russian laundromat, which involved false debts created in foreign courts and then enforced by foreign judges who were corrupt. And a lot of that money is ending up in Western countries. It's being invested in real estate in London and in New York, driving up real estate prices, for example.
Yes, that's true. Roy, something on that, on the trends in general and the methodologies that they're using nowadays, and any trends in the future?
Yes, well, I agree with Stefan. It's becoming more sophisticated, more complicated with the layering through shelf companies, nominee directors, layer upon layer. So actually sifting through all that with the due diligence that the financial institutions are meant to employ gets more complicated, even if you have a financial institution that is serious about doing it. Of course, they have potentially a conflict of interest. Who wants to deny someone coming in waiving a $50 million check that they want to deposit? So that's a challenge. One of the particular issues that I've been working on, and some of my colleagues, is the whole question of beneficial ownership, which you know, there's been some developments in the UK and other countries in terms of public registries, which in my mind is a good thing. Transparency is always a good thing in my judgment, but we need to go, I think, beyond that, because even though you'll have, if you have a declaration, a public declaration of beneficial ownership, that gives people opportunities to challenge that, whether they be law enforcement or governments, the media, civil society, whatever. But it still sort of poses the question, how good is that beneficial ownership information? So the organization that I work with, the Global Organization of Parliamentarians Against Corruption, we've adopted and we've plagiarized to some extent from Raymond Baker, who I'm sure Stefan knows about. He's based in Washington, Global Financial Integrity, and he wrote a book on dirty money, but basically saying that we need to have more accountability to the beneficial ownership declarations. So if you make a declaration of beneficial ownership, there must be sanctions if it ultimately shows that that beneficial ownership declaration was false or misleading. And in fact, sanctions such as freezing of funds, confiscation, and measures like that. So that's an issue we've been working on and presenting our arguments to various governments around the world.
Okay. Nicholas, do you want to add something on this? Maybe something on the beneficial ownership as well, which I know is a sticky point.
Yeah, I think nothing really to add. I mean, I think that Stefan and Roy have elegantly outlined the main concerns about beneficial ownership. I think that money laundering is a very difficult problem to prevent and detect, and I think, as Stefan alluded to, the money launderer will always be one step, if not several steps ahead of new anti-money laundering regulations or the enforcement activities of agencies in Europe and in broader parts of the world.
Okay, just before I go to the next question I have here, I want to ask something about information technology in general. How is that helping money laundering? The new thing about cyber security attacks we see and that sort of crime, because I see money laundering changing in that way. Anyone wants to answer that?
I'll happily offer some thoughts. I think it's another example of the evolution of money laundering, and as we've seen with the recent cyber attacks on the National Health Service in the UK in the previous 2 weeks, and obviously the software. I just think it's natural progression, and I know one of the questions later on looks at how terrorists are now using social media platforms and the internet as a war of propaganda, as President Donald Trump said a few days ago. So I think it's just another example of how the money launderer is using new forms of technology to transfer funds possibly in less regulated areas. So, for example, the current issue within the UK is whether or not our legal framework actually covers virtual currencies and cryptocurrencies. I know within the US there's been some recent developments, and also within Australia as well, but it's as if the British government is a little bit hesitant to incorporate these forms of payments into its money laundering legal framework. So, for example, 2 years ago, the government published several consultation papers asking for views on whether or not these should form the basis of the then 2007 money laundering regulations, and that has still not been incorporated yet. So I think that the UK is still trying to find its feet a little bit in how to tackle sort of e-money and virtual currencies in terms of money laundering as well.
If I could add something to that, you have to be cognizant of what the typical payment methods are in the environment in which you're trying to regulate. In the United States and in most of the West, most people are banked, and the transactions occur through banks, and therefore, or or other financial institutions that are like banks, and therefore we focus on our AML efforts on the financial industry. But in other parts of the world, in parts of Africa, payments are often made by having stored value on telephones, and the processing is through the phone company. And you have to, if you wanted to be aware of money laundering activity going on in that part of the world, you'd have to be focusing in an entirely different way on an entirely different industry, different technology, and different methods of payment.
Okay.
If I could just add something briefly. Yes, in Africa, we've interacted with a number of politicians there, and they say a lot of the laundering there is in cash. People go out to the countryside with cash in their briefcases and buy votes, and so it sort of stays below the radar of the financial institutions. I think, though, just to comment on technology, I think there might be the prospect that technology can actually help in the fight against money laundering in certain respects. First of all, if you look at the Panama Papers and the way that information, it was sort of digitally spread around the world. If you look at social media, if there are public declarations of beneficial ownership, suddenly you can get a lot of chatter on social media saying, the beneficial owner declared here is XYZ, but this doesn't make any sense because we know that, so it gets that discussion going, and they can build on that and perhaps shed some light on some phony declarations.
Okay. Yep. So let's next question. What is a basic question? We all know the KYC, know your customer. What is it, and how should this policy best be implemented? And let us start with Nicholas on this one.
I think one of the key things about sort of know your customer and how it should be implemented is that this is clearly enshrined within the European Union's Anti-Money Laundering directives, and it's then also been enshrined as part of the 2002 Proceeds of Crime Act in the UK and the recently implemented 2017 money laundering regulations. I think the key thing from my point of view is that it is know your customer, and these rules are called the golden rules of money laundering. So they form the initial obligations that, for example, banks, law firms and other reporting entities have to have. Part of the concern from the UK banks has been the sheer amount of KYC, from money laundering, terrorist financing. We've now seen the scope extended to the Bribery Act of 2010 and the Section 7 defence. We've now seen tax evasion and tax avoidance also being incorporated into, and the possibility of fraud following a consultation paper published in January this year by the UK government. So cost has been a huge issue, and research suggests that compliance costs in the UK have dramatically increased over the last 5 to 6 years, where costs now could be, well, based upon estimates last year, up to £5 billion per year. So I think that they form an essential part in the battle against money laundering, but there are some issues currently within the UK and probably other jurisdictions as well.
Okay. Stefan?
Well, traditionally, know your customer refers to the obligation on the part of the financial institution to know who its client is, who the person is who is maintaining an account, and by some small extension to know who the originator is of a wire transfer that's coming in, or who the beneficiary is of a wire transfer that's being processed. And much has been done in that field. There's still some room for improvement. If I had it my way, the know your customer rules would require knowing not only the originators, the name of the corporation, but knowing the beneficial ownership. There's a movement to try to extend know your customer rules beyond financial institutions to, as Nicholas was mentioning, law firms and other gatekeepers, and that needs to be done. But the point I wanted to make or to emphasize is that know your customer also applies in trade-based money laundering. There's many examples in the United States of vendors who sell their product, their goods or services, to foreign purchasers, and are paid not by their customer but by a third party. A typical example would be a vendor selling jewelry in Los Angeles who sends the jewelry to, say, some country in South America, and suddenly receives a deposit into his bank account in cash in, Chicago. One has to not only know one's customer, but know one's customer's payor. And there should be some rules regarding receipt of money from persons with whom you've had no business association.
Roy, something from?
Yeah, I think that know your customer is something that's now pretty much enshrined. The question is, how well is it being done, and what are the sanctions if it isn't done and the due diligence isn't done completely? I think that many financial institutions, as Nicholas has pointed out now, they're realizing that they're exposed if they don't do the due diligence properly, and they could be on the hook for some penalties. In fact, there have been some financial institutions that have already experienced that. So their compliance is getting tighter. But I think at the fringe you have some financial institutions that maybe go through the motions. Seems to me that know your customer includes knowing who the beneficial owner is, to the extent that you can do that effectively. But you know, my view is that inherently there's a conflict of interest, and that has to be managed right at the top of an organization to make sure that someone isn't just going through the motions of doing the due diligence and then gives a report to their boss saying, well, I've checked it out as best I can, and it seems to be all okay, and someone signs off, and you know, $100 million check is deposited. So I think we need to really push that envelope hard and make sure that financial institutions are audited and checked about the extent to which they apply the due diligence and how they do it effectively.
Okay.
Marius, can I add something there? Yeah, I agree with what Roy's saying completely, and I think you've raised a really important point. It comes down to enforcement, and I think what we're seeing within the UK is this is the problematic area in terms of enforcement of our money laundering regulations, but also the primary offences of money laundering under the Proceeds of Crime Act. So what we have in the UK currently is the Financial Conduct Authority imposes large financial penalties on corporations, even where there was no evidence of money laundering. And the highest fine to date is £163 million on Deutsche Bank in January this year. So what we're finding is that the imposition of these penalties is very inconsistent. So you've had calls recently this year where we've seen a record number of, record number isn't the right word, we've seen the lowest number of prosecutions of KYC in the UK. So I think until that, the enforcement strategy changes within the UK, I still think we're going to see more and more firms possibly trying to avoid this type of formal regulation.
Okay, my next question, I'll probably combine this with a follow-up because you said some things up now about enforcement. Basically, how can we have sufficient AML rules to ensure the world is clean without stifling business transactions? So how do you ensure it without making it, let's say, too ivory tower, too complicated? Stefan, do you want to take this one?
Well, I can say that from my experience, I in government worked on money laundering issues for 30 years, and back in the late 1980s, early 1990s, the financial institution was extremely resistant to the notion that they were in any way participants in what they considered to be a law enforcement effort. They would say, you're the police, we're the banks, you catch the bad guys, we process their money. And their argument was that they did not want to be, you know, drafted into the law enforcement sphere by being required to impose rules that were going to chase customers away or send customers to other jurisdictions that didn't have such stringent rules. The banking industry pretty much has come to terms with this, and I don't think that it has limited banking business. Banking seems to still be robust. There is a concern, however, that a lot of financial institutions follow the rules by engaging in box ticking. They want to know what is the minimum they're required to do to avoid sanctions, and they'll do just that. In other words, they're interested not so much in detecting the crime and advising law enforcement of its existence, but in making sure that they do not suffer their own liability. I would go to many trade conferences, and the representatives of financial institutions would ask me, what is it you in government want us to do? You know, tell us what the warning signs of money laundering are. And I would say, if I gave you, you know, 3 things, that you would do only those 3 things, and that's not what we're looking for. You need to be vigilant and look for anything out of the ordinary in terms of what would be normal business practice. So I think that that's one of the major difficulty is in encouraging, as we've done for decades now, to continue to encourage the financial institution to be partners with law enforcement and governments and regulators and not adversaries.
Okay. Roy?
Yeah, I think that it's always a fine balance. It's similar to the balance between, you know, civil rights and the ability to enforce laws and have the public being, you know, in a safe environment. It's a difficult thing, and the issue, I think, is that you don't want to make things so intrusive. On the other hand, money laundering is such a serious matter when you look at its linkage to drugs, to criminality, to terrorism, to corruption, etc. It needs to be dealt with. So an example that comes to my mind, in Canada, we know that most of the money, this was a study that was done in relation to the RCMP a few years ago, but most of the money laundering in Canada goes through real estate. And a lot of it, I think, is in Canada is drug money. We of course, we also get some offshore money going through our banks as well, but a lot of the drug money in Canada, it goes through real estate. And so when we brought in our anti-money laundering legislation and rules, we basically decided to have a pretty big tent and not grant exemptions to anyone, really. And there was a huge amount of pressure from the real estate industry because they said, you know, here we have a pending sale of $1 million property, and they walk in with a briefcase full of cash, and then you have to say to the person, well, you realize I'm obliged to report this to the FIU, Canada's FIU, FinTrack, and isn't that inconvenient? And then, oh gosh, you know, and so, but in any case, what we did as a government is we tried to make the rules as simple as possible, but we refused to back off because, you know, it's inconvenient, but I'm sorry, you know, this is typically drug money, and there's a lot of it, and it's going through real estate, so we have to deal with that. But it's always a fine balance. You've got to pick the kind of interventions that make sense and that aren't, you know, totally intrusive, but you've got to deal with the problem at hand.
Yeah. Nicholas, let me ask you another question relating to this anyway, but the next question, how will the recent legislative measures introduced in the UK, such as the provision of Criminal Finance Act 2017 and the Money Laundering Regulations 2017, help prevent terrorist financing?
That's a good question. I can't talk about that for a few hours, but I'll try and summarize a nice, concise answer for you.
You have 2 minutes. There you go.
The 2017 Criminal Finances Act is the UK's largest financial crime legislation overhaul in 15 years, and it's the culmination of several policy developments, including the creation of the Panama Papers Task Force by David Cameron 2 or 3 years ago, various action plans, and the publication of the UK's National Risk Assessment for Money Laundering and Terrorist Financing. But what the Act tries to do is that it tries to improve how the UK can confiscate or forfeit the proceeds of crime. It tries to improve the use of suspicious activity reports by financial institutions that are submitted to our FIU. It looks at tax evasion and also introduces some small number of measures for terrorist financing. So, for example, it allows information sharing, but on a voluntary basis between a reporting entity and the police and the FIU, and also includes then new powers for seizure and forfeiture and also disclosure orders. But the difficulty I have with the 2017 Act in particular is that David Cameron, former Prime Minister, announced 7 or 8 years ago that they were going to do a comprehensive and thorough review of the entire UK's counter-terrorist financing provisions. That has still not happened yet. And I've come to the conclusion through my research that terrorist financing is the subject in the UK that nobody really wants to talk about at governmental level or to try to implement new measures. So I think by having these 3 small measures, they will increase cooperation between law enforcement, reporting entities, and so on. But even with the 2017 regulations, they're a direct response to the 2012 recommendations and updated report by the Financial Action Task Force. So they're always going to be closing gaps that existed in the previous 2007 regulations. So hopefully, firms will be able to improve and adopt a more risk-based approach, which are clearly enshrined as part of the European Union and Financial Action Task Force's AML and CFT strategy anyway. So I think it's a wait-and-see answer for me in terms of how these could maybe limit financial crime.
Okay. Because you said the risk-based approach, which is one of the Fourth AML Directive issues as well. Stefan and Roy, Stefan, do you have anything to say on the risk-based approach?
Well, not on the risk-based approach, but I did want to comment on something that Nicholas was just talking about, and that is in terms of legislation. Yeah. One of the most effective tools that governments have in the money laundering and terrorist financing area is asset forfeiture. It's all well to have KYC programs and to detect crime and to enforce those, and it's all well to be able to prosecute money launderers criminally, but frequently we have found the money, but we have no ability to lay hands on the perpetrator because he's a fugitive, he's unknown, he's in a foreign country, he's just beyond the jurisdiction of whichever court we're talking about. But through non-conviction based or civil forfeiture, the governments can seize those assets and make sure they're not used for an unlawful purpose and force the owner of the money to come forward and appear in court and defend his ownership of that money. And I'm happy to say that in many countries around the world, most of the Anglophone countries now have non-conviction based forfeiture programs of some kind. The UK and Ireland and South Africa and Australia, to name a few, all do. Other countries are beginning to adopt those. Throughout Europe, there's a movement through the EU to discuss at least the enactment of non-conviction based forfeiture, recognizing its essential role in interrupting the flow of this money. Unfortunately, there's a bit of a pushback here in the United States. We're fighting to preserve the robust set of civil forfeiture statutes that we already have, and not turn the United States into a money laundering free zone, which there are some who would do. But I just wanted to make the point that that's an aspect of legislation that we all have to be focusing on. Okay.
Roy, do you want to add something to this as well? Anything from Canada side there?
No, just to say that the non-conviction-based asset forfeiture is something that we promote with our parliamentary colleagues around the world. We think it's a very important initiative, and yeah, glad to see that more of it is coming into play.
Okay. Nicholas, a question on social media now. How are terrorists using social media platforms to fund their operations?
Yeah, I think this is the recent project that I'm working on as part of a larger research funded project. I think what we're beginning to see, and a lot of this is influenced by the Financial Action Task Force 2015 report on emerging threats, is that we're now beginning, obviously, you know, Islamic State of Iraq and Levante, ISIL are very well documented in terms of using social media as a form of propaganda. But the more and more I looked into this, and there is some uncertainty as to whether or not these type of social media platforms actually are part or are currently governed by UK legislation at all. So what we're beginning to see is terrorists beginning to use Twitter, Facebook, other forms of Instagram, Telegraph, and so on, to actually ask for donations. So the US State Department in 2014 and 2015 has identified that some ISIS financiers who use Twitter and Facebook to attract finances via social media, and so they're now part of the sanctions list. But what you find is that when the social media company takes action and removes them from the public forum, they can simply set up another account in a matter of minutes. And in some of these instances, those named by the US Department of State and Treasury still have 150,000 followers on Facebook, for example. So I think it's another example of the evolution of terrorist financing, you know, away from the state-sponsored terrorism in the 70s and 80s and from the predator nations, as we've seen with in terms of 9/11. But we're now seeing more lone wolf terrorist financiers, and recently reports have concluded that anybody with a mobile phone, or cell phone I should say, or a tablet can be an international terrorist financier. And I think that raises some concerns about how can the law actually prevent prevent that. And what we're seeing with ISIS in particular is what I concluded in a research publication this year is like a hierarchical approach, whereby it's a corporate approach. It's run like a company, which is similar to how the IRA was financed in the 40s, 50s, and obviously until the Good Friday Peace Accord.
Okay. Isn't Nicholas, I'll stay on the social media, another question, and anyone can answer this one as well. Through social media, don't they get the criminals, let's say, they get people unknowing finance and without knowing financing terrorist acts?
Yeah, that is true, and we've seen some recent cases in the UK where the organised criminal or terrorist will deliberately target people over 65, people over 70 who are quite new to using the internet. So we are seeing money laundering schemes and also fraudsters deliberately targeting, I suppose, who you would call high-risk internet users.
Mm-hmm. Yep. Somebody else on this social media use to add? Okay, let's proceed to the next question. Stefan, in the US, what sorts of mechanisms are in place by both the IRS and the Securities Exchange Commission to counter money laundering? And what does the Foreign Corrupt Practices Act entail?
Well, the SEC, the Securities and Exchange Commission, can sanction firms and issue disgorgement orders, but it must rely on law enforcement agencies to bring criminal prosecutions and to file civil forfeiture complaints. Securities violations, however, are predicates for our money laundering statutes, and that means all of the law enforcement agencies, including the IRS, can open criminal investigations based on the laundering of the proceeds of securities crimes. So criminal prosecutions for money laundering in securities cases are therefore not uncommon, and the convicted defendant in such a case would have to forfeit all of the property involved in the money laundering violation, the proceeds of the securities fraud and anything else that was used to commit the laundering offense. As I mentioned earlier, if no criminal prosecution is possible, that is, the perpetrator is dead or he's a fugitive or for some other reason a criminal prosecution is not in the offing, we can recover the property involved in a money laundering offense through civil forfeiture, and that is extremely common. In the Bernie Madoff case that everyone would know about, I'm sure, one of the perpetrators was deceased and a lot of the money, over $1 billion, was recovered through non-conviction based forfeiture. The Foreign Corrupt Practices Act, the FCPA, is part of the Securities and Exchange Act, and its best known provision probably is the one that makes it an offense for a U.S. person to make a payment to a foreign official for the purpose of obtaining business. But more directly related to AML issues, the FCPA also requires companies to make and keep records that accurately reflect the transactions of the corporations that they're supervising, and to maintain internal accounting controls. And these records, of course, are very, very important in terms of tracking historically transactions that were part of money laundering and terrorist financing. Many companies, in fact, are taking additional steps to reduce their exposure by employing services of due diligence companies that are tasked with identifying government officials who might be embedded in businesses not identified as government officials, but that are accepting payments in this indirect way. So the FCPA, therefore, is part of this the broader picture. But I think the most important point is that people do launder illicit proceeds through securities. So the securities can be both the instrument by which the money laundering takes place, and the securities fraud can be the criminal act that generates the criminal proceeds in the first place, such as insider trading and so forth.
Okay. Let me go to Roy and ask, Roy, how can parliamentarians contribute in the fight against money laundering? Some would assert that parliamentarians are part of the problem. So, what's your opinion here?
Yeah, it's a good question. In fact, a few years ago, I was on a panel in Ankara in Turkey on dealing with political financing, how to make it more accountable and transparent. And at the end, someone in the group, in the audience, if you like, posed that question. And it's a good question. It caught me by surprise, but it's a good question. Of course, we need to stand back a bit and look at if you look at government, the different elements of government, you have the executive branch, the legislative branch typically, and then the judiciary. Whether you have a Westminster model government or a presidential system, typically that's the way it's cut. Of course, we have parliamentarians that are corrupt. In the group that I'm involved with, GOPAC, the Global Organization of Parliamentarians Against Corruption, these are people that are committed to the fight against corruption and money laundering, and they see the devastation it causes to their citizens, leaving millions of people in abject poverty while the leaders are stuffing money into Swiss and Canadian bank accounts. So, you know, we need to, what we believe there is a particular role for parliamentarians to hold the executive branch to account. My view is that a lot of the corruption and money laundering occurs at the executive level. These are the ministers and members of the cabinet who have a lot of the levers of power. These are the people that in some countries will deny or approve a mining project or an oil and gas project. So it's the executive branch that Parliament, the legislature, is meant to hold to account and push for greater transparency and accountability. So that's where we believe that parliamentarians have a big role to play. And one of the things we do is we try to convince parliamentarians of how they can use that power, particularly over the purse strings. In most countries, legislators, if you look at the U.S. Congress, if you look at many models, the legislative branch has a lot of power over the purse strings. So they can use that to hold the executive to account. And we've had a lot of success with parliamentarians around the world in bringing in legislation or through question period or through various mechanisms, engaging the media, where parliamentarians have a lot of leverage to bring to light where the executive branches of government are not really following through, let's say, on commitments they've made under the Convention Against Corruption or commitments they've made to the FATF. So we think there's a big role. Yes, of course, there are legislators that are corrupt. We don't invite them into our group, and we have some ways of vetting that. Yeah, so we think there's a big role, and we've seen how parliamentarians can be very active and progressive in this area.
Okay. Nicholas, coming to you now, what are the changes brought about in the EU's Fourth AML Directive?
One of the biggest change really is implemented by the Fourth Directive, which the UK implemented in June this year, has been to incorporate the updated and amended Financial Action Task Force recommendations from 2012. But broadly speaking, the directive seeks to enhance, for example, and to re-emphasize the risk-based approach and how it puts more onus and obligations on a reporting entity. It re-emphasizes, again, as we discussed earlier, customer due diligence or know your customer or know your client issues in also relation to PEPs, beneficial ownerships, and also in terms of record keeping as well. So really the Fourth AML Directive within the UK scenario seeks to cover some of the gaps and anomalies that existed in the 2007 money laundering regulations. But what we tend to find from a UK point of view is that given that the primary law under the Proceeds of Crime Act normally exceeds the obligations of the directive, any implementation of the EU directive is what we normally call gold plating. That doesn't make the UK's laws better than other jurisdictions. That's open to debate and conjecture. But of course, we've now seen a fifth proposed directive, and one of the issues I'm looking at currently is the use of virtual currencies, and some of my colleagues are, and that is still not governed yet by the Fourth Directive. So if the Fifth Directive is implemented, and the UK pending the Brexit negotiations over the next 2 years, it'll be intriguing to see if or not the UK does implement the regulation of virtual currencies as part of that format. What makes things a little bit more complicated in the UK is that we have an additional layer of regulation, which is by the Financial Conduct Authority, the so-called city regulator. They also have their own money laundering rules as part of what we call their Systems and Control Handbook. So in addition to the EU directive, reporting entities in the UK, if authorised by the FCA, also have to comply with these obligations as well. And that's where the big fines can be imposed by the city regulator, like Deutsche Bank I mentioned to you earlier in the webinar.
Okay. Stefan, since was mentioned again the digital currency, I'll direct this question to you, and then following the others can answer as well. What have the authorities done or are doing to prevent the use of Bitcoin to finance illicit activities of the purchase of illegal goods? And also, what sorts of problems have emerged from the need to regulate a currency that in spirit was designed not to be regulated?
Right. Well, it does present a substantial challenge. There have been criminal prosecutions in the United States, the most famous being of Mr. Ulrich and the Silk Road, involving the use of Bitcoins and on an internet-based scheme that where the Bitcoins were used to finance various kinds of illicit activity, from drug trafficking to human trafficking to the distribution of child pornography. So there have been prosecutions that are involved the use of digital currencies. What's fundamental, though, is that legislation has to be updated to include such digital currencies within the definition of funds or money or monetary instruments, as those terms are used in various statutes and in regulations. Otherwise, our existing laws are not going to apply when these new currencies are implemented or used. That applies not only to Bitcoins, but to things like electronic gold, stored value on other media, whether it be a physical card or in a telephone, and so forth. We have a lot of regulations that relate to the movement of currency across the border from the United States to another country. The purpose of those regulations is not to stop the flow of the currency, but to monitor its occurrence, so that you can take any amount of money out of the country or bring it into the country that you want, but if it's more than $10,000, you must report this to create a paper trail. Well, how does that apply to digital currency on a stored value card or to a Bitcoin? It's, on the one hand, the regulations need to be updated to make sure they apply to such currencies. On the other hand, how do you detect it? How do you detect someone moving money in or out of the country on a stored value card or on his cell phone? Do we need new technology at the border? Do we need other means? Or is it simply impossible to prevent the flow of the money? After all, Bitcoins don't cross the border physically. People transfer them electronically using their tablets or their laptops. So those are the challenges it presents. We do have to update the laws, but we also have to recognize that the technology makes the traditional way of enforcing the laws somewhat anachronistic.
Okay. Roy, do you want to say something on this as well?
No, I won't comment further. I just wanted to, maybe if I could, pick up on an earlier point Stefan made about the corruption of foreign officials. We, in Canada,
yes,
the government that I was involved with, we brought in a similar act, the Corruption of Foreign Public Officials Act. Frankly, we didn't put enough resources there, and the government that followed us, in fairness, they put more resources into the RCMP actually, and our intelligence agencies to actually prosecute these cases. A lot of it comes through whistleblower information that is followed up and in some cases substantiated. And we've had a number of prosecutions, and as a result, I think many corporations in Canada are looking at their ethics policies and procedures, their compliance procedures, and beefing up that area, because they know that you know, they're exposed if they don't do that, because there's been a lot more activity on this front in Canada as well. With respect to Bitcoin, I'm afraid I haven't really studied that in any depth, and yeah, good luck to those that are yeah.
Nicholas, do you want to say anything on Bitcoin technology? Add something?
Where do you start? Yeah, I think Stefan has clearly outlined some of the concerns and issues. I can just come back to a point that Roy made briefly about the corruption of foreign officials and so on.
Yeah.
We've seen with the UK Bribery Act 2010, the Serious Fraud Office beginning to flex its enforcement muscles, but not through way of criminal prosecutions, but through what we call deferred prosecution agreements. So we have Rolls-Royce recently and the $500 million fine that they've paid. So what we're seeing, I think, from within the UK is more and more active enforcement from the ESA, but hopefully tackle corruption and bribery as well.
Mm-hmm. Let me come to a question relating to tax here, since we're on TaxLinked as well. We have a couple of questions on the chat here. So first question, explain the use of money laundering for tax evasion avoidance purposes, please. So how do you explain the use of money laundering for evasion, for avoidance of, and let me go to Stefan.
Well, money laundering can be used to disguise the fact that you had any income at all. And in the tax evasion context, what we're talking about is not laundering the proceeds of tax evasion, but concealing or disguising your income so that you pay no taxes. And we've seen that quite a bit in the Russian examples, where money that is earned in Russia is disguised as being funds from another source, so that the corporation or the individual or the oligarch is not paying taxes, and the money is being transferred out of the country in sort of a flight capital context so that no taxes are paid. That's the focus. I think we see that all around the world, really. You know, it also dovetails with public corruption and the kleptocracy. You know, foreign leaders who are corrupt, and they're not only not paying taxes on their money, of course they're stealing money from their local population. But so the notion is money laundering techniques, which are used to conceal or disguise one's association with money, are not being used only to conceal or disguise their association with criminally derived money, but their association with legitimate money so that it's not taxed.
Okay. Roy, anything to add on this?
Yeah, just that the work that I do with parliamentarians on fighting corruption and money laundering, we see the two as inextricably linked. I mean, if someone is paid a bribe, they're not going to declare it on their income. So in fact, one of the issues, big issues we had in Canada when we brought in our anti-money laundering legislation was a concern of citizens through their members of parliament, through their senators, that of the potential sharing of information with tax authorities in Canada and elsewhere, and concerns around the privacy of information. So we had to, it was like walking on eggshells, but we convinced Parliament and Canadians that we would be very sensitive around that. But yeah, the two are, you know, inextricably linked. If you're taking bribes, you're not declaring it as income. So you know, how those authorities work with each other, I'm not sure, but hopefully there's at least some degree of collaboration.
Okay, Nicholas.
I've got nothing really to add apart from just re-emphasising you know, this is an issue that the UK government are now beginning to take quite seriously, and there are various proposals within the Criminal Finances Act to criminalise money laundering that links into tax evasion and tax avoidance. The key issue I have here is enforcement. Are these provisions are going to be enforced by Revenue and Customs or other regulatory bodies? Because the UK tends to have a rather inconsistent enforcement strategy towards breaches of financial crime or economic crime. So that will be the key issue for me about some of these issues that Stefan and I have alluded to.
But I guess enforcement is going to be an issue on all of these new regulations, and making sure that several authorities talk to each other as well. Another question I have here on the chat, how government can track their taxpayer investment and assets in other country where taxpayer is using a second passport as their identity. Basically, that relates to the passport selling for residency that we've seen in the recent few years. So how can we control the taxpayer's investments in assets in other countries if the taxpayer is using a second passport as a form of an identity? I guess this has to do with know your client as well issues and AML issues as well in general.
I can't speak to the question of the passports, although I know that would be an important question. But what the government I was involved with, we brought in a procedure with people filing income tax returns there's a question now on every personal income tax return that a Canadian files in Canada is, do you have assets outside of the country? And so you have to say yes or no. And of course it doesn't, people can lie naturally, but what it does mean is that it forces people to make a declaration one way or the other, and that because in Canada we tax, it's based on residency. If you're considered a resident of Canada, you're taxed on your world income. So you have an obligation to declare your world income, and of course you get tax credits, etc. But we just felt that put the burden, a bit of the onus on the taxpayer to declare if they have foreign assets. They couldn't come back later and say, well, gosh, I didn't realize I had to declare that or pay tax on that income. So, but with respect to the passports, I'm not familiar with that aspect of it.
On that point, one thing that we in the United States have been asking our Congress to do for some time now is to close a glaring loophole in our international money laundering statute. The statute right now makes it an offense to send any money, whether derived from a crime or legitimately derived, out of the country for the purpose of promoting or committing another crime abroad or another crime in the United States. And omitted from the list of crimes that you could be accused of promoting is tax evasion. It seems to me that if it's a crime to send money out of the United States for the purpose of bribing a public official, for the purpose of financing terrorism, or for the purpose of buying drugs to sell, it should also be a crime to send money out of the United States for the purpose of committing tax evasion. And that right now is not an offense under our statute, so we've been trying to get that fixed.
Okay. Nicholas?
It's not an issue I'm particularly familiar with, really, so I really wouldn't want to add anything to what's already been mentioned.
Okay, very good. Do you want to tell us some things, because we are closing in about 5 minutes maximum from what I see on time here. Do you have some closing remarks? Nicholas, do you want to say a few things on the, I guess, challenges that you see in terms of, because you have legislation, you have rules, you have parliaments, governments, but then you have people who actually have to carry the task of proper compliance in AML. What challenges do you see these people facing?
I think the challenges that people within the compliance sector within the UK are going to be facing are more and more forms of regulation. So the reaction will be, well, costs will increase, compliance costs will increase, but also the further sanctions will increase. So what we're seeing by the Financial Conduct Authority is what it calls its credible deterrent strategy, which means that if they feel a firm has breached some form of AML compliance, they will fine the bank or firm and also the money laundering reporting officer as well. So that can have a catastrophic effect on that person's well-being and their livelihood. So I think we're going to see with the Criminal Finances Act and more proposals published in January this year, more and more forms of compliance. And the issue then is about proportionality in terms of costs and whether or not the sector is willing to carry on acting as a financial policeman.
Okay. Roy, anything to add on the challenges of the actual people who are doing the compliance jobs? The challenges
one of the things that we've done at GOPAC, the Global Organization of Parliamentarians Against Corruption, by the way, we have membership in 50 countries in all regions of the world, is we produced an anti-money laundering action guide. I'll hold it up here.
Okay.
And, it's an anti-money laundering action guide for parliamentarians. And it's in our 3 official languages, English, French, and Spanish. And what is the purpose of this is money laundering can be very technical. And so for parliamentarians, you know, we have other task groups looking at parliamentary conduct, the compliance with the UNCAC, United Nations Convention Against Corruption. But this guide tries to demystify money laundering for parliamentarians so that they get up in their chamber, their legislature, and they attack the government, for example, for not doing enough. And someone asks about PIPs or previously, you know, politically exposed persons, or layering, or smurfing, or so we want to make them more familiar with the terminology of money laundering, and also in this guide we show them how it's done. and also then what are some of the solutions. So we work closely with the FATF, with Interpol, with the World Bank, the IMF, and UNODC, and we came up with this guide. And so I think it's been a useful tool for parliamentarians, so when they take on this challenge, that at least they're sort of briefed on some of the aspects of it that are in many cases quite technical. So we're hoping that this is a useful tool. In fact, we've seen it has been, and so we're going to continue on with initiatives such as that.
Thank you, Roy. Stefan, any final remarks and anything you want to say else?
Yes, I think that the challenge going forward is to find ways in which all of us working together can overcome the hurdles that are presented by the concept of national sovereignty. Criminals act globally. They move money from country to country and jurisdiction to jurisdiction electronically or through couriers, and they could care less about the existence of national borders, whereas we in law enforcement and the regulatory industry are required to comply with our own strict concepts of national sovereignty. We cannot, law enforcement in one country cannot send a subpoena to another. We have difficulty in enforcing each other's confiscation orders. We have difficulty in even asking other countries to freeze assets once they're identified. I can give an example of how it should work, of how it can work in concept. When General Abacha in Nigeria stole $4 billion from his country, laundered that money through banks in the United States, and then placed it in jurisdictions around the world, including France and Jersey, the United States was able to cooperate and obtain a non-conviction-based confiscation order in Washington, and then we took it to the Isle of Jersey in the Channel Islands and asked that it be enforced, and after applying Jersey law and being satisfied that concepts of due process were honored in the United States, the order was enforced and the money was recovered and ultimately will be returned to the Nigerian people. Unfortunately, that's an example that is an exception to the rule. Generally, in my experience over decades, the greatest hurdle to doing all the things we've been talking about for the past hour is just getting cooperation from foreign jurisdictions and getting foreign courts to honor foreign process. We have to find a way of catching up with the way the criminals are able to operate with so much more flexibility and ease in this global economy.
Okay, so great. Thanks to all of you then. It was a pleasure having this discussion with you. Thanks to our participants to being online with us for the last hour or so. And I don't know if Matteo is joining us to close the session. Yes. Matteo, you're here, so say the last words. Bye-bye from me.
Okay, thank you very much, Marius, for doing a great job moderating. Thanks, Stefan, Nick, and Roy for being with us. I think it was a very insightful and useful webinar for our members. Just a few admin issues to get out of the way, which I repeated at the beginning of this session. We have an audio recording of this event. It should be ready in shortly. Also, we will have a full transcript of this event. That should be out within the next couple of weeks. We'll make sure to email all of you who signed up and attended this event, also the panelists, so you can share with your network. So on behalf of TaxLinked, Masha, and myself, I just wanted to thank you and hope you have a great weekend.
Thank you.
Thank you.
Thank you very much.
Bye-bye.
Goodbye.